Hello, everybody. All right, we are all set up here. Okay, we are doing great. We're on track, guys. We are on track to get funded in this Topstep Combine account. This is my first time in a prop trading firm, and I am recording and documenting everything called the Funded Trader on YouTube. And it's really it's for myself. It's like a video journal. I don't know how many people are going to watch this thing. Maybe nobody, but that's okay. It is for learning purposes, and I like to go over my notes, what happened during the day. I like to go over how I reacted in certain situations. And it's all part of helping you stick to a plan. And that is what I am finding recording all of this stuff to be. And I highly recommend it. Highly recommend it. So recording all of this is pretty useful. All right, so what do we have here today? You can see I drew out a bunch of lines here. What are these lines on the chart? This is something that I learned from Jason Stapleton, one of my very first mentors. He used a lot of pattern recognition and ratio confluence. And I learned how to use Fibonacci properly from him. And so, what I've got here, I have it on the TradingView platform. I have an extension, right? I have the Fibonacci extension here to here, okay? And then I have the retracement tool from here to here, right? And when you put the extension and the retracements of Fibonacci on your chart, you're going to get clusters of lines. And right in here, you can see that the 50% and what is that? I don't even know what that is. I can't even see it. But there's a cluster of lines, cluster of lines here, cluster of lines here, along with some support levels from your opening range tool. Okay. Opening range tool. And, those are great markers. You could see how prices come down to 1.272. That is one of the Fibonacci extensions, and it's bouncing off of that. Now, this is the 15-minute chart, and we are in a downtrend, and we've got a delay there. So that's what's happening right now. All right, and if we put that, let's see if we can, I think I could add those, didn't want to do that. Let's go back and do it again. All right, so we have extension, all right, we're going to do the extension. Here to here and back. That is the extension. Extend right. And you can see how this works out very nicely, right? That's the extension of this. And what did it do? It went right to the 618, went right to the 1.618 retracement, right there, or extension on Fibonacci, and pulled back. Where's it pulling back to? It's pulling back into the 1-hour trend cloud. So 1-hour chart, pulling back into the 1-hour trend cloud. We have to assume that this is going to be the area, right, where price makes the next move up. The demand zone that we drew out, however, is down here, right? It's down here. And where is that? Let's get the retracement tool. Swing low. Oh, come on. Swing low to swing high. There. And you can see the white line is the 50% retracement, right? So what this is saying is that price is, hits the 1.618, pulls back to the 50%, and then goes. But our trend cloud is right here, and it looks like it is sticking inside of that trend cloud. Now, the move from here to inside the trend cloud has shifted momentum below negative 100, right? Negative 100, here's negative 200 right here. All right, so we're pulling back into the trend cloud with, inside a 1-hour uptrend, which is what we want, but we're pulling back with a great amount of momentum. So, to play the man zone guessing game with a ton of momentum to the downside is very dangerous, right? And that's what we've learned, is that we don't really like taking demand zones when you've got a ton of momentum, to the downside. let's look at the full charts here. We've got the 4-hour chart here. 4-hour chart, momentum is good, right? Momentum is up. It broke above positive 100 and is now pulling back into that blue shaded area there, staying above the 0 line. Okay. The 1-hour chart, the move from here to here was pretty pretty strong. Okay, and we're at 938 right now. So this right here is the candle that's forming the opening range, and you can see it's quite bullish. It came back up, hit that 1.618 retracement level or extension level. Sorry. Let's draw our lines here. We're going to draw our Fibonacci lines. I mean, I am just saying the wrong things today. We're going to draw our opening range lines. It's okay. I think there's only like 5 people watching this right now. You guys know what I'm talking about. There we go. Okay, so this is what we've got going on. What do our components look like right now, right? We've got everything to the upside except for that 1-hour CCI. And we like to have all of our components met pre-market, don't we? So I think we're going to have something like we did yesterday. Opening range forms, bearish opening range candle, and then a breakout to the downside into some sort of demand zone. We have to drop down to the 5-minute chart and wait for the break of structure to take place. It's going to look like a W pattern, right? We've got to wait for that W pattern to take place inside of the demand zone here, because if we don't, the amount of force that's going on right now, break out of the opening range to the downside, a lot of momentum, right? Strong momentum to the downside. You could break through demand zones, right? And that's how you get stopped out at each demand zone, playing the demand zone guessing game, right? We don't like that. I don't like that. Very strong move to the downside right now. This does look pretty good, right? Is it going to stop there and turn around? I don't know. And at this point, I only need, $1,000 basically, $1,300 to get to profit target. So do I want to take a chance on playing the demand zone guessing game? Probably not. I want to bring this down. I think it's pretty safe to say we're going to have some kind of breakout to the downside, but it's going to be very short-lived, right? The breakout to the downside is going to be very short-lived, just like yesterday, right? Just like yesterday. I had to wait until I saw a retest on that 5-minute chart where price broke out from. So there's a few ways to play this. We can either leave this alone, right? We want to focus on long premium setups, right? Premium setups, spectacular looking setups. That's what we want. We want a spectacular looking setup where we've got 3-hour CCI above the 0 line, 1-hour CCI above the 0 line, in an uptrend on the 1-hour chart. Then look for the bonus components. Opening range is formed on a bullish candle. Breakout on the 5-minute chart. 5-minute candle breaks above the opening range. That's what we're looking for, right? At this point. That's what we're looking for at this point. So we've got so far, this is kind of a neutral looking thing, right? The wick looks like it's going to be quite even on both the top and the bottom, maybe some kind of spinning top candle, but that's looking like the opening range so far, right? That's the opening range so far. Let's see here. I don't want these lines to be confusing people. There we go. So, we had said last night, oh, well, this is looking pretty good, this demand zone here. 50% retracement level. But again, we might be able to take, and we can't take a breakout short, right? Because the price is above the 50 simple moving average, right? So we have to calm down, right? We got to calm down. What we're doing right now, what I'm doing right now is I'm trying to game plan in a scramble, right? We're in a scramble right now. We don't have all the components met. In fact, we have mixed signals, right? We have an uptrend with downward momentum, right? That's a mixed signal. All we need All we need is for price to break out to the upside and then start climbing back up above positive 100 here on CCI. That's what we need. But we like to have that pre-market. We don't like to have that during, right? So remember what I was telling you guys about premium setups? Premium setups, all conditions met pre-market. That's what you want to go after. And it's just so beautiful. It is less headache. And what's really interesting is that our strategy here that we back tested, it's 68 to 70% accurate. Guess what my numbers are on Topstep? Take a look at my numbers on Topstep here. 69% winning trade percentage, 69%. Go figure. I'm using a strategy that is 68 to 70% accurate. And look at my win rate, 69%. There's the proof right there as well. And that's proof that I'm more or less, sticking to the strategy. So these numbers, you really have to understand the numbers you're looking at for proof of concept, right? This is proof of concept right here. And if you're using a strategy that's 70% accurate, but your winning trade is 40% accurate, well, then something's wrong. It's obvious that you're not using the strategy, right? So these numbers make a lot of sense. There you go. So I'm right, $1,300. That's all I need, right? That's all I need. Okay, so we've pulled back into the 1 hour trend cloud. This is pretty much doing what we want it to do. We're just not quite there yet with all of our components. And we can't trade we can't take a trade that's outside of the strategy because things can go a bit haywire. And we don't like that. It's very stressful. Trading is hard enough. Don't make it harder, right? Trading is hard enough. Don't make it harder than it should be. So this is looking good. This is looking good, right? Breaking out to the upside because we've pulled back into the 1 hour trend cloud. Okay. And we're about to break out. So let's drop down to the 5 and let's see if this 5-minute candle closes outside of the opening range here. It's too bad we don't have momentum with us just yet. Right? We don't have it with us just yet, but we are in the right spot for a breakout to the upside because we're in the 1 hour trend cloud. And we have to assume that that is what's going to happen. Let me see. What does that look like on the 1 hour? Yep. 1 hour trend cloud is definitely green. It's definitely green and is where it's supposed to be. So this is a pullback on the 1 hour into the second wave, right? That's pretty accurate. It's pretty accurate. Okay. 949. And we are looking at some type of breakout to the upside nice and early. Perhaps if we get a breakout to the upside and price or CCI breaks back above the 0 line, we can take a retest of the opening range, a shallow retest of the opening range. But again, at this point, I'm really looking for a premium setup where all conditions are met because I want my next trade to be at least $1,000, right? That's what I want. I don't know if that's what I'm going to get, but I have the best chance of making the most money and gaining the most profit and squeezing every penny out of this trade only if I trade a premium setup where all conditions are met pre-market. And that's what we want to do. And I think everyone in the group has been journaling about that and writing that down. I was like Bart Simpson the other day in the coffee shop, writing out over and over again, do not trade outside of the strategy. Do not trade outside of the strategy. What exactly did I write? Where is that? Do not take trades outside of your strategy. No more trading outside of my strategy. Do not take trades outside of your strategy. Write some notes to yourself. That's what I did. And believe me, it helps. Writing out affirmations really helps. And it makes what you want a reality. You must attract, or you must become what you want to attract. You must become what you want to attract. And that means writing stuff out in the present tense. Every trade that I take makes money. Every trade I take makes money. I trade inside of my strategy. I only trade premium quality strategies. I only trade my strategy when it's premium, when it's spectacular, when all of my conditions are met. And you got to write that stuff out. You have to write that stuff out. You got to say it to yourself, talk to yourself. That's what you got to do, because it's very easy to get caught up in the euphoria of a win. And then when you look at your chart and you say, well, I've got everything except for, that 1 hour CCI. Yeah, so what? Wrong. Do not do that. And recording these videos, this is like, this is a video diary basically of, becoming a funded trader, this whole series. And so it's very important to have these conversations. I highly recommend it, even if nobody watches it, right? I'm doing it for you 5 people, right? That hang out with me. That's it. And for myself, right? Of course. So highly recommend doing it. Maybe that should be one of the bonus developmental stages that we go through here at Trend Cloud to become a consistently profitable trader, right? And I'll mention it in every video. Number 1, learn the basics. Number 2, practice the basics in the simulator. Number 3 is get involved in the Leap day trading competition. Try to finalize in the top 10% over and over again, right? Number 4 is the small account challenge, right? Take $500 in the simulator and turn it into 5,000. How long did it take you to do that? It took me 3 months, and I blew the account out twice. Then do it live. Do it live, right? That's part B, right? To number 4, right? Do it live. Expect to lose the $500 live. Try. Just try and do it. Try and do it. Once you've completed that, you move to phase 5. You move to phase 5, which is to trade live and start your combine. Okay, or trade live in your own account. So all of those 5 phases of development, I think, are crucial to being successful in a prop trading firm account like Topstep. Okay, because you're going to have to make decisions under pressure, and if you're not able to perform, or you continuously trade outside of your strategy, I don't know if it's going to go. It may not go so well. It's best to trade within your strategy. So look what's going on here, right? Kind of a little bit of pong, a little bit of ping pong going on, right? Between the two opening range lines there. We're trading inside of that 15-minute opening range candle, aren't we? What's going on here? Well, hasn't chosen a direction yet. And if you're wondering why, well, we've got a great strategy, right? It's called the Trend Cloud Opening Range Strategy. This is a modified version of the opening range, and we use CCI as our high time frame and middle time frame momentum direction, and we use the 50 simple moving average on the 1-hour chart for trend direction. And those components must all be in alignment with each other. This is like a chiropractor, right? Alignment must be in alignment. That's funny because I actually went to chiropractic school for 2 years and decided to do this instead. But yeah, so alignment is an important word, right? Everything must be in alignment for you to take the trade. So chiropractors would love this strategy. Let's see here. So you can see how mixed signals keep you safe, right? We really want to finish this combine, and we're going to. We will be funded by the end of the month. I will be funded by the end of the month, right? So very interesting price action. Always observe the movement of price. How fast are the candles moving? How slow are they moving? Where are you on the map? I know exactly where I am because I've got this trend cloud system, right? I know that we're in an uptrend on the 1 hour chart. That's my trending time frame. 1 hour chart is up. It has pulled back into the 1 hour trend cloud, and it's trying to make a move to the upside here. Unfortunately, with the opening range breakout strategy, my CCI component is not met yet. Okay. If we were back here and these were the readings, right? CCI 3 hour chart above the zero line, CCI 1 hour chart above positive, looks like it's above positive 200 right here. And it's pulling back, maintaining above the zero line, right? That's what we want to see in this situation at this time. But we don't have that, right? Then if you start seeing a breakout to the upside, my God, it's a no-brainer, no-brainer. But it's not what we have. We're below negative 100. That's going to throw a monkey wrench into our strategy. We don't like monkey wrenches. No monkey wrenches. I'm going to make a t-shirt. I'm going to do something special for us when I get funded. I'm going to like make t-shirts for us or something. We'll have to come up with a slogan. No monkey wrenches. Something that we say all the time in the live room. That would be fun. Send me your t-shirt sizes and we'll do something special. We'll have a little celebration. Interesting, right? This is I'm very happy to see this indecisive price action. I'm very happy to see it because it's I because our conditions aren't met. If we had this type of indecisiveness when all of our conditions are met to the upside, I would be upset about it. I'd be disturbed by that. But I am not disturbed by this because we have mixed signals, and mixed signals mean sideways movement, indecisiveness, whipsaw, all of the terrible things that traders dread. We dread the whipsaw. We dread slow moving, indecisive markets, right? We dread range bound markets that don't do anything, especially if you're involved in the trade. Then it's, oh my gosh, it's terrible, right? It's pretty painful and very stressful. So eliminating stress is going to be a big part of your trading day. How do we eliminate all of this stress? Well, do not trade mixed signals. Now it's looking like it wants to break to the downside, right? Before it looked like it was going to break to the upside. Now it's going to break to the downside. You'll never know. All you can do is trade what you see. And what I'm seeing right now is mixed signals, right? We do not have the CCI component met on the 1 hour chart. Ugh. 10 a.m. and no breakout. We've seen that happen before, right? We don't really like that. Trend and momentum are fighting each other right now. The trend wants to go up, but the momentum is so strong to the downside, it's not letting it. And CCI is such a great instrument because, or indicator, right? CCI is such a great indicator because it's built for commodities. It's actually built for commodities, the commodity channel index. Why wouldn't you use that tool? This genius mathematician invented it in 1980. Why would you not use it in your strategy? Very good tool. Getting close again to breakout. Now, do we get the breakout to 50%? I wonder what's going to happen when and if this breaks out to the downside here. Goes down, hits the 50%. Maybe it slightly misses the 50% and just hits that 1 hour 50 simple moving average. Let's open up the 1 hour chart and get a real close look here. With all of that strength to the downside in momentum, it could blast through a couple of demand zones. It could blast through, and momentum on CCI is below negative 100 right now. With a push down, it's going to be below negative 200. Look how CCI right now is trying to break through negative 200. That's a lot of momentum, guys. That's a lot of momentum. Why would you go long with all of that momentum to the downside? I don't like it. See, we like taking demand zones that take place in this situation, right? Whoops, right here when price breaks above positive 200, right? And then it pulls back shallow above it doesn't cross below the zero line, and it definitely doesn't cross below negative 200, right? It pulls back into this blue shaded area. And as it's pulling back into this blue shaded area, or from positive 200 to positive 100, price is pulling into the demand zone at that point in time, right? Price is pulling into the demand zone right here and then moves up, right? Positive 200 right here. Price comes down, pulls back into trend cloud. See how CCI is still above the zero line? And then what happens? Boom, gets a little bit of a pop up, right? Definitely breaks past the previous high of this 1 hour candle and then started to move down again, which is fine. But that's how we like to take demand zones. We do not want to play the demand zone guessing game at this point when CCI is below negative 200. My goodness. The best thing to do, right? We have a trend cloud strategy for this. When price gets to this demand zone, down here, hits that 50%, we drop down to the 5 minute and we start looking for our pattern, right? You go down to the 5 minute and okay, and we're going to look for this pattern. Let me draw it out. On the 5 minute chart, we want to see, let me do this thing here. We want to see something that looks like this, right? From here to here. We want to see something that looks like this, right? Some kind of little double bottom. This is what happened yesterday, guys. Boom, right there. That's where we want to take the entry, right there. Okay. What did I do yesterday? Okay. Yesterday, price did this, went into the demand zone that we were looking at. It made this 5 minute breakout pattern, the W, and it did this. It actually went pretty high, right? And then as it came back around, I took the trade right there. Okay. I took the trade right here and pretty much made my 800 bucks, right? Because it went from here all the way up to the previous day's high. And I took my targets. I scaled out of the position on the way up. Okay. So that is a very powerful pattern. I like that, right? This in itself becomes your breakout zone, right? That becomes your breakout now. Goes into the demand zone, you get a pullback, and then you've got to have some sort of double bottom, right? Pulls back and breaks up. Okay, so that is your breakout. So what I did yesterday was I took the retest of the breakout of that W pattern, and it was very effective. And I did it all on the 5 minute chart. It was very effective. So if you're trading a demand zone that is below the 50 simple moving average and you've got a lot of momentum to the downside and you want to take a demand zone, that is how I suggest you do it. That's how I'm going to do it. I'm not going to play the demand zone guessing game anymore. There are certain times when you can take a demand zone just as is, maybe it's on, really high time frame or something, but even then, it's really, I don't think it's the best way to do it. I would much rather do this, right? Wait for that pattern. So in fact, I'm going to leave it. I'm going to leave it just like that. And there we go. There's the breakout to the downside now on the 5 minute chart. All right. And again, this is against the 1 hour trend and the 3 and 4 hour momentum, right? 3 and 4 hour momentum are still up. So we're going, the only thing that this is, and look at that little bit of a retest already. Who knows? Maybe it won't go all the way down, right? Maybe it won't go all the way down there to that demand zone. Maybe it's just wants to break to the downside just a little bit and completely reverse. I'm going to leave that pattern on there. Take a screenshot of that if you want. I think it's pretty helpful to understand that pattern. And if you think about the risk management of this, and we've got 1 minute left here on the video, guys, but the risk management here, you can enter the trade here on the breakout, scale out of the position, and then take it again with whatever contracts you have left. If you want to max out at 5, right? take off, one tolls back, and then you can get back in 4 contracts again right here to mitigate risk and then scale out again. This is beautiful. That is a beautiful way to approach it. All right. Video is going to end soon, guys. So definitely take a look at that. Screenshot that thing. Put it up on your wall.